Are you ready for a game-changing revelation that has the potential to completely transform the silver market? Well, over the last few years, there has been a significant shift in the international arena as central banks around the world have been accumulating gold at an unprecedented rate. This accumulation is not limited to gold alone, but also includes silver, a metal with immense industrial and investment potential. What makes this trend even more, and I mean more intriguing, is the global movement away from the dominance of the Western financial system. Many countries are actively seeking alternatives and diversifying their reserves, looking beyond traditional fiat currencies. In this mind-blowing video, Andy Schectman reveals a Brics bombshell that will leave you questioning everything you thought you knew about investing in silver. A recent discovery regarding Brics countries and their approach towards silver is about to disrupt the market in ways we've never seen before. This revelation has the power to reshape the entire landscape of silver investments and create new opportunities for savvy investors like yourself. Let's get into it. Central bank accumulation of gold and silver. In the last 18 months, central banks worldwide have embarked on an unprecedented spree of gold and silver purchases. The scale of these acquisitions is truly staggering, with central banks buying a combined nearly 230 tons of gold in just the first quarter of this year alone. This marked the highest quarterly gold purchases ever recorded. The remarkable aspect is that this trend of increasing gold holdings shows no signs of slowing down, as central banks continue to add to their positions, signaling a fundamental shift in their approach to asset diversification and wealth preservation. One country that stands out in this surge of gold buying is China. For an impressive 7 consecutive months, China has been actively increasing its gold reserves. The consistent and deliberate strategy showcases China's confidence in the enduring value and stability of gold. As one of the world's largest economies, China's gold purchases not only solidify its position as a major player in the global gold market, but also reinforce gold's importance as a strategic asset in times of economic uncertainty. India, another significant participant in the global economy, has been making substantial strides in increasing its gold reserves. Over the past few years, India's gold holdings have risen by over 40%, demonstrating a firm commitment to diversifying its reserves and safeguarding its wealth. The notable increase in India's gold reserves underlines the country's recognition of gold as a timeless store of value, particularly during periods of financial volatility and geopolitical uncertainties. It's not just China and India that are actively accumulating gold and silver. Other countries have also made remarkable progress in bolstering their gold reserves. Take Iraq, for instance, where the Bank of Iraq saw its gold reserves surge by 2.5 tons in a single day, increasing its holdings by 2%. This intentional move by Iraq reflects a concentrated effort to strengthen its reserves and diversify its asset base. Singapore is yet another noteworthy example, with its gold reserves experiencing a remarkable 35% growth in just 3 months. Brics and the shifting global landscape. The Brics alliance, consisting of Brazil, Russia, India, China, and South Africa, is gaining significant influence on the global stage. These nations, individually recognized for their economic might and strategic importance, have come together to challenge the existing world order dominated by Western powers. By leveraging their collective strength, Brics is reshaping the global landscape and offering an alternative vision for international relations and economic cooperation. According to a recent article, 25 countries have formally applied to join Brics, a significant international alliance. During their annual meeting on August 22nd in South Africa, discussions will revolve around the introduction of new currencies. Jim Rickards, in a report, has highlighted the possibility of a commodity-backed currency, an idea that has been widely discussed in the past. These developments became even more intriguing when considering recent actions taken by French President Emmanuel Macron, who has been pushing back against the West and embracing Chinese relations. Macron's purchase of liquid natural gas and yuans and the establishment of a 51-point agreement with China covering various areas, including 5G and military engagement, further indicates his interest in the global shift. In fact, according to the South African president, Macron has requested to be present at the upcoming August meeting. Furthermore, Japan's recent purchase of Russian oil above the US benchmark price of $60, acquiring it around $70, has caused displeasure and concerns regarding Western sanctions. For instance, in the first 2 months of this year, Japan bought around 748,000 barrels of Russian oil for approximately $70 a barrel. These actions suggest an increasing acceleration of events. When considering the significance of these countries and their actions, Jim Rickards emphasizes the potential practicality of a new currency. The evaluation and repatriation of gold by various countries, including those in Europe, is also noteworthy. Countries like France have exchanged gold bars that do not meet London Bullion Market Association standards, possibly in preparation for an impending event. Rickards suggests that these actions align with the interest of Brics, particularly considering that China and Russia rank 6th and 7th, respectively, as the largest gold producers to the world. Moreover, when considering Saudi Arabia and Russia, these countries also feature among the top 3 oil energy producers globally. The inclusion of Russia, China, and Brazil and India in Brics brings together 4 of the 7 largest countries in terms of landmass. This alliance accounts for 50% of the world's wheat and rice production, as well as 15% of global gold reserves. Moreover, the collective population of these countries, which include India, China, and Brazil, represents 9 of the highest populated countries in the world. In addition, Russia and China possess the 3 largest nuclear arsenals globally. When evaluating factors such as population, landmass, energy output, GDP, food production, and nuclear weapons, the significance of these countries joining forces in an ideological endeavor becomes apparent. Metal market concerns. The recent drop in silver prices and the unusual trading activity have raised concerns in the metals market, as pointed out by Andy Schectman. While he acknowledges not knowing the specific reason behind the price decline, he highlights the significant amount of silver dumped in a short period last week, 25,890,000 ounces or 575,178 COMEX contracts. Such actions are not reflective of someone seeking to maximize returns, but rather appear to be targeted to demoralize the market. This disconnect between price action and rational trading behavior raises questions about the motives behind these large sell-offs. Furthermore, Schetman always draws attention to the accumulation of gold by central banks over the past 18 months and the trend of countries moving away from the Western sphere, including allies. These countries are actively utilizing gold and silver as part of their de-dollarization efforts. In this context, the price of precious metals becomes less meaningful as it fails to capture the true value and significance of these assets in the current geopolitical landscape. Another significant factor to consider is the rising trend of deliveries in the metals market. This year alone, nearly 13,000 silver contracts equivalent to 65 million ounces or over 2,000 tons have been delivered. In the case of gold, over 240 tons have been delivered from COMEX since January 1st. Moreover, there has been a steady increase in deliveries from LBMA as well. These substantial deliveries across the globe indicate a growing tendency toward de-dollarization and a diminishing relevance of price action in determining the true nature of these metals. Volatility and impending change. Volatility in the market can be often seen as a precursor to significant moves, and this holds true for the precious metals market as well. Andy Schectman emphasizes the importance of recognizing the volatility and understanding its underlying implications. The recent dumping of large quantities of silver in a desperate manner raises concerns about the motives and intentions of certain market participants. Such actions indicate that we may be nearing a critical moment where substantial changes and opportunities could arise. Amidst this volatility, there is an environment of apathy prevailing in the precious metal space. Many investors seem to overlook the potential opportunities presented by these market conditions. This lack of interest provides astute investors with an advantage. By recognizing the disconnect between market sentiment and the underlying fundamentals, investors can position themselves strategically for potential gains. One of the advantages for investors lies in the availability of precious metals. The dumping of large quantities of silver has created an opportunity for investors to acquire these assets at favorable prices. It is essential to understand that the price action in the short term may not accurately reflect the true value of these metals. Therefore, investors who recognize the long-term potential can take advantage of current pricing discrepancies. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.